Hello and welcome. My name is Benoit Poliquin. I'm one of the portfolio managers and the founder of Exponent Investment Management. And today, just want to do a quick video on what happened this week with Netflix. Why investors are all worried about this name. Stay tuned. So why are investors freaking out? So this is the chart of Netflix going back 5 years. So the stock has gone from $152. Here we go back at $215. So basically almost all of the past 5 years have been erased. Most of that downfall has been basically since December, where the stock nearly got to $700. And today, Friday, late April 22nd, we're at $215. So what happened? So on April 19th, Netflix reported its latest quarter. A couple things really stood out. The first thing is that 220 million, they have 222 million paying customers. But management fessed up and added that there's another 100 million additional households that aren't paying for the service. So from an investment standpoint, you're starting to think, well, wait a minute. 1 in 3 viewers aren't paying for your service. So either they don't see the value in it or you're charging too much. That's bad news. There were other problems as well. Competition. When Netflix started streaming, it was the only game in town. Now all of these services are coming on strong. You've got YouTube, which really should be used as a entertainment platform or should be viewed as such. You've got Hulu, Amazon Prime, Disney, and more to come. So they don't have the field all to themselves. A couple more things stand out when you go through the quarterly report. First thing first is you've got millions of 7 billion or revenues of 7 billion, marketing costs and so on. But basically what you want to look at, or the things that stood out to me, is when you get to the cash flow statement, you're realizing that there's a lot of accounting adjustments they're going through, namely around content assets. So if you stop and think, Netflix goes out and creates a series, they have to front load the cost of those series and then amortize them over all of the revenues from their subscribers. But the problem is, what is that content really worth? Unlike, say, a Disney or a Mickey Mouse or another sort of character that you can turn around and sell over and over again, you're probably not going to watch all over again Stranger Things or the latest series that Netflix put out. So the problem that they have is what is the content really worth? Is it worth one viewing or is it worth multiple viewings? And that's really one of the questions that many investors are starting to ask. How do you value that book of content? If you go back to the balance sheet of the company, you're looking at contents that are worth $30 billion. Okay, fair enough. But there's $14 billion behind this debt. So you're starting to wonder, okay, there's a lot of debt. That's real money. And this content, what is that really worth? Okay, another way to view this is this way. The market value of Netflix is roughly $96 billion as of Friday. So you take $96 billion and you divide by the number of viewers they have, which is 220 million. And you get the market viewing this company at $432 per subscriber. So if the average ticket is, say, $20, the market is valuing that the clients will stay with them for at least 8 years. And we're not talking about margins here. We're just talking about straight revenues. So really, one could say that investors are starting to question, what is a viewer or a subscriber of Netflix really worth? So you had investors pricing a stock for perfection, and all of a sudden investors are realizing, well, wait a minute, what is that content really worth? And what are the subscribers worth? And finally, you've got another problem from an investment standpoint. You've got yields nearly at 3% on the US 10-year. What does that mean? Well, you've got to figure out that as interest rates rise, future profits are worth less. So you have to readjust down the value of your investment with higher interest rates. That's why Netflix, in the past couple of weeks, certainly in the past since the 19th or the 14th, has lost over $100, over 33% of its value gone, evaporated. Has lost over $100, over 33% of its value gone, evaporated.